Very good morning to you. We are live from the IG studios. Welcome to Trade Live with IG. With me, Rich McDonald, and IG's answer to JD Vance sitting next to me. Good morning, Ronnie.
Good morning, Rich.
Guten Morgen.
Guten Morgen to you too. Also, a special good morning to the McDonald family at home watching.
They are as well.
Yeah, my favorites.
It would have been my father's 80th birthday today, I know. He must have had me when he was 50 years old already, clearly. But yeah, so happy birthday to my father, and yeah, to the family out there. So how are you, sir?
Yeah, I am. I'm really good. I've had a big missed call yesterday. So I was when we saw the BYD figures coming out, I cockily texted my friend who's a big Tesla bull, and I told him, "You're gonna get smashed today." But instead my prediction got smashed. But you guys are quite used to this at this show. So yeah, but beyond that, we move on. Minor setback from major comeback, Rich.
Tell me that again. Is that your quote of the day?
Minor setback for a major comeback.
So that almost ties in with one of the quotes. Doubt is the father of invention.
Oh.
But our quote of the day today, live from the Stock Traders Almanac. I'm going a little bit off-piste. It was never my thinking that made the big money for me. It was my sitting. Got that? My sitting tight when markets are turbulent. Jesse Livermore.
Good guy.
Good guy.
We go way back.
Certainly.
We go way back.
he would have been making money yesterday, wouldn't he?
Yeah.
Because if you sat tight through this turbulence, through the time that the CTAs were not only selling their $50 billion of longs, but then going 30 billion short, if you were one of the retail traders that picked up $67 billion of stock while the CTAs were selling, you would have had a smile on your face yesterday. Hands up in the chat if you managed to call this market, because I'm sure some of you have nailed it and would have reaped the rewards yesterday.
Well, if you're a long-term investor, I think this sort of past turbulent period that we've seen, it's been ideal. You pick up high-quality stocks on the cheap, it's been on discount. And as the great Charlie Munger said, it's better to buy a good stock at a fair price than a fair stock at a good price.
Like that. He knew what he was doing, didn't he?
Yeah, I mean, he has a decent track record. Doesn't have a 45% gain on the demo, but you know.
Neither do you anymore, mate.
Anyhow, what's today's segment? What do we have coming up today, Rich?
Let's go to that. Right, do we have the coming up slide? Gents, there it is. Tuesday, 25th of March. We have trade expectations coming up at 8:25. We've got today's market measure, which is a continuation of our beginner's guide to option. How are you all doing with that? The series is about to come to the new YouTube. I'll let you know when the first one is going to hit. What have we got after that, Ronaldo?
After the sort of when we get the worst part done, we move on to trade expectations with Angeline Ong and Ruby Lau, and following that, Angeline Ong continues with the Trader Tools segment with Tom Wolstenholme.
Very good, very good. Right, shall we see what is going on in the chat land then?
Yes,
what are
please
these
do.
apes up to this morning?
Because Cam ruined my computer, I can't go in. I can't go in myself and have a
they
look.
switched my telly off as well, so I can't even see the chat.
Tech team is doing great.
Good morning to the world of techies. It is our good friend Dr. Watson is back.
Dr.
We've got Daddy Cam on the buttons as well, and then we've got producer Phil, of course.
We've got producer Phil. It's a new beginning.
Good morning, Monkey Man. Good morning, Gavin Ackers. Buenos dias to Maturin and Mandrill Man. Now, Mandrill Man, have we seen you before? I think that could be a new one. And TY to the C thinks it's going to be a positive day for the Nasdaq. That's interesting because Nasdaq futures currently down 6 basis points. You think it's going to go even higher? 2.4% wasn't enough for you yesterday. Top of the morning to you, Donald, and Miss R6 Senna there. Julian's in. Supersonic saying, bit of a slow burn this morning. We've got a revamp in HSBC and some solid Iron Brew earnings. Iron Brew beat estimates.
Well, of course, it always beats my expectations.
AG bar.
Whenever I have it.
And then, yes, Andrew McHale, we point out we've got Bellway as well. Our friends at Numis have already sent their view on Bellway. So we will be coming to you with that as well shortly, because we're going to go over in overnight action. The sounds you may hear are Roddy's machine.
I finally got
Restart.
it. I finally got it back up and running again.
Right, so we take a look at the news stories of the morning. So we are looking at the times there. Times will be main story, of course, China's BYD overtaking Tesla sales. That is the one that Ronnie hit us with this morning. There's a beautiful, do we know what that model is? The BYD model? Atto 3.
I'm not very familiar with the model branding of BYD, but what I do know is that they've done an absolute brilliant job. They've sort of cornered the entire market, and one thing that we forget about BYD is that as we saw that the American manufacturers and the European manufacturers overinvested in EV, and there was more focus on hybrid. BYD has that as well. They have the hybrids, they have the fully electrics,
Right.
They have all different price ranges. So BYD's done an absolutely brilliant job. They own their entire supply chain. They even own the ships that they send their cars from China to the US.
That's interesting.
Yeah, and
Are they electric?
that I don't think there are electric ships out there. But maybe you and I will start an electric ship venture, Rich. And they also have major expansion plans with building factories in Latin America as well.
I'm impressed. Good knowledge.
Thank you, sir.
Do we think, what effect does this have on Tesla after yesterday? Tesla's run yesterday was nothing short of incredible. Let's get the chart up to see the recovery. Doesn't quite show it there. There's a better example of what we've been through. Monday the 10th, that was the day that I arrived in Cheltenham for the Cheltenham races, sitting having pizza in Franco Manco, looking at the destruction of Tesla in front of me. Every time I looked, it was down another $1.
Yeah, I mean, that was the day that I lost my bet to Fred as well, that it was going to hit 239 before his final day. So that was a dark day for the both of us. And you even lost some actual money on the races. So, but yeah, I think yesterday really goes to the fact that you can have the analysis correct. You can have all the logic and correct ideas in place, but sometimes the market just doesn't care. It just will do its own thing. Like I said earlier today, if we see BYD coming out with topping Tesla revenue, Xiaomi is raising funds to accelerate even further, and then Tesla goes up 10%, it doesn't really make any sense.
So when was this news out, the BYD?
Yesterday, came out yesterday.
So this was a representation of the numbers.
Sorry?
It's fully in the price here, in the Tesla price.
Yeah, it's in the price. So it was quite surprising for me. Went above my head. Maybe a more intelligent man such as yourself, Rich, can explain what happened.
Well, no, because we were on a date yesterday afternoon.
We were.
So that was the majority of the day, and I nothing could better that. So I didn't even look at Tesla last night.
I couldn't look anywhere else but beyond those ocean blue eyes, mate.
So Roddy and I spent the afternoon yesterday in an offsite for the company, and we were joined by the wonderful Matthew Said. So Matthew, of course, was a table tennis champion, England's number one. He went to the Olympics in Sydney, went to Commonwealth Games, two sets of Commonwealth Games, and he is now a motivational speaker, a speaker on change in the workplace, and gave a really good talk, didn't he?
Yeah, it was riveting to say the least. Rich also took the point in when asking his question. He formulated his question by giving himself a shout out that he competed against him in the Commonwealth Games in the track and field.
So Matthew and I were at the Commonwealth Games together in 2002.
But fun fact, Matthew did not remember Rich.
It's because he didn't even come to the opening ceremony. Couldn't believe it. There's a big dilemma, and you would have seen it in the Paris Olympics last year, sorry. The organization of Paris was this terrible 2-hour procession down the middle of the Seine. And all the athletes had to stand in a boat in the pouring rain for the 2 hours. So Matthew had the problem at the opening ceremony of Manchester, which was clearly the best moment of my life. Because the Queen was there, Tony Blair was there, and as the English team walked into the stadium, they were playing flawless, absolutely flawless. And the whole place just kicked off. But poor Matthew was back in the village, already in bed, because the table tennis was the same day and the next morning as well.
Yeah, well.
So my question was centered around the song Absolutely Flawless, which, if you've seen some of Ronnie's trades, that is exactly how I would describe his demo account.
Right. Enough of this utter woke nonsense. Shall we move on to the markets?
Go on, you tell me what you're seeing overnight then.
Yeah, so what do we have in the overnight news? I've seen quite some interesting stuff here in the markets moving. FTSE had a pretty nice low momentum.
Yeah, so there's the futures, how we're looking. The money, you've had the downward crash of the US. All the money went into Germany, gold, and some FTSE. But then we had the money coming out of Europe again, back into the US. So the FTSE did not benefit at all yesterday from the big rally. And we see that we're pretty much at the same level now as we were yesterday in the FTSE. So it's that money flowing back into those favorite names, isn't it?
Yeah. I think it was sort of slight comeback a little bit. It was positive to see it, but I think we still have a little bit of caution before the big money tariffs, as Trump described them, that comes on April 2nd.
Well, but is that all that was behind the rally yesterday?
I don't think so. I think people are coming to the realization that it's gonna be turbulent times, right, with Trump, and I think we have to realize, the markets are realizing that we can't sort of swift our in positioning in our investments each time Trump makes a tweet.
Yeah, but that's what happened. The reason we opened up 75 basis points this time yesterday was because the tariffs were touted to not be as widespread on April the 2nd.
Yeah, so that was positive news.
So during the day, he said, well, that's not true. I'm going to put additional tariffs on automakers, on pharmaceuticals, on chip companies, and on lumber companies.
And anyone who buys Venezuelan oil.
And 25% on Italy, Spain, and India, who buy Venezuelan oil. But the market didn't budge. It continued on its move higher. So I don't know. I think once it gets into that momentum, once the machines have decided that they're buying, then...
I mean, we also saw some positive figures coming out of Europe with the service index having some positive uptick in Germany. So I do think that there is some European momentum coming, and we see sort of hints of European growth.
Let's take a look at.
I think that's also a positive note that the market's like.
So we've got the flash numbers from Germany there. We've got the S&P PMIs in the UK. That manufacturing looks loaded, doesn't it?
Yeah.
And high on the services side.
And for context, everything above 50 is indicating growth, and vice versa, obviously. But the global services in the UK is showing at 53.2, which is very strong. And the idea is this is supposed to compensate for the lack of manufacturing growth.
Yeah.
Because, I mean, like it or not, I mean, I know Trump really wants to onshore American manufacturing jobs. I don't think we have the same sort of ideal or capacity in the UK, but we have to face the fact that the Western economies are moving towards a more service-based economy. And I think one thing that shows that is that SAP has now become Europe's biggest company. They overtook Novo Nordisk yesterday.
Interesting.
Yeah. So SAP, who works in B2B software, they've done really well in that section, and now they have focused their technology on cloud-based software rather than previously working on the company's networks. Now they have their software on cloud, which means they can upsell additional AI technology. So I think that's an indication that we're moving towards a more service-based economy more than we already were.
Right, so there's the graph of SAP. Yeah, look at that. It has had a great...
I think it's up about 40% this year alone.
No, that's January there. So 239, 254. We talking about the same thing, SAP in Germany,
Yeah.
No.
They gave me the wrong info on the podcast in the morning then.
40% in 12 months, it is. It is up 40% in 12 months.
Yeah, 12 months. Sorry, yeah. Not
year,
for a
12
year.
months.
A year,
Yeah,
12 months. Hey, bada bing, bada boom.
Tomatoes.
Hey,
Yeah, maybe the Swedish calendar is different.
we
to
follow the
UK
Mayan
one.
calendar.
Right, let's get on to... I hesitate because this does go out on American channels as well. So I will not say anything about JD Vance. I hesitate from saying what everybody's thinking. Shall we go through his huge security bluff along with Hegseth?
I've missed this.
Oh, have you?
Yeah, I just the one thing that I saw is that some investment fund bought his house $170,000 above market value.
No. This is one of the biggest security breaches of all time. They've added a journalist to their WhatsApp group chat. Sorry, it's Signal, on Signal.
Yeah.
Group chat by accident when they were planning the attack on the Houthis.
Oh.
Right?
This was JD Vance doing.
JD Vance, Pete Hegseth, and the head of staff as well. JD Vance, I fully share your loathing of European freeloading. It's pathetic. This has been ratified. It's real.
I mean, is anyone really surprised? You saw how he acted with Zelensky. Like, the guy's not really impressing me as a top diplomat.
Yeah, but this is a whole, the top leaders of the country of the free world in a group chat where they're putting emojis, a punch emoji with an American flag and fire when they successfully bomb their enemies. Right?
I mean, I can't.
Good job, Pete, and your team.
Can't say I'm surprised.
But how do we make Europe remunerate us? What if Europe doesn't remunerate us? This is their problem, not ours. Europe has a lot coming to them because that proves the thinking that is in the at the top realms of the White House. They are out to destroy anybody who they think is freeloading off them.
Yeah, I think it's. I mean, it's pathetic in my opinion that the sort of the leaders of the free world. This is supposed to be the police of the world, the leader of the free world. They're acting in this sense. I mean, I can't say I'm surprised when the few times that I've actually listened to him. When JD Vance was elected, I was quite positive about it because he's worked with Peter Thiel. He has a background in VC and in tech, so I thought this would be someone who would be, fostering growth, fostering tech innovation. But instead, it's just someone who's brought a frat house mentality into the White House.
As the FT puts it, the memoir writer turned vice president. So yeah, Elon, currently the most hated man in the White House, but not that he is in the White House, spends a lot of time there. But we'll just see how long Vance lasts.
What do we have here, Rich?
We have here
what do you have up on the
Vodafone.
charts?
I noticed, Maturin saying Vodafone took a dive yesterday. This is why it's so much easier to be short puts in Vodafone than it is to be long stock, because you always know there's going to be a day like this. So let's have a look to see if the Bank of America downgrade. Bank of America downgraded the stock yesterday. No, it's not actually on tip ranks here. 7th of 3rd. So this was a downgrade yesterday from Bank of America to neutral, and the stock was down 4.5%. Goldman's, remember, we're buying 36 million shares a day right at the start. Yesterday they bought 3 million. So there is no support from the buyback there at this moment in time, hence why you get the stock dropping like it did yesterday, down 4.5%.
Like my energy levels listening to this, mate. Yeah, absolutely interesting stuff. riveting.
Yeah, no, one of the most widely traded stocks, by IG customers, but I'm sure they don't have any interest in hearing why it was down 4.5% when the S&P was up 2, do they?
Literally no one. Literally no one.
Literally because it's on the top 100 traders long list.
Yesterday I was like back-to-back phone calls, and it was just like, please tell Rich, no one cares about Vodafone. No one cares. Sorry, sir. I'll let him know. Hi, welcome to IG. This is Ronnie. Tell that Scottish guy, Rich. We don't want to hear about it.
Yeah, Scottish man.
Yeah, tell that Scottish man. We don't want to hear about it.
How's your computer doing?
We're back. We're back in full effect. But I don't want to.
Do you want to get a chart up? Let's see what chart.
Yeah,
it
but
is
I don't.
Ronnie's.
I don't want to bend over and pick up the cable to. Okay.
Go on.
They're telling me in the. We're back here.
Oh dear. The IT. Oh, what are we doing? No.
Oh.
Oh dear. Come back, Fred.
Oh.
Good stuff.
Back in full effect, lads.
Right. So yes, we've got trade confusion. We've been through that. We've been through Tesla's sales tumble. We've got JD Vance is an effing idiot. We've been through that. The 25% levy. Iron Brew. We've talked about that. Now, what numbers do we have coming up today? We've got the German IFO, Ronnie.
The German iPhone?
German IFO at 9 a.m. So we will be on air when that comes out. Expected 86.8. But why am I looking at the German IFO on my screen? That's because it's the first time that we've seen this survey taken since the new government there has got this passed in Parliament.
And what is the IFO for us in the unknowing?
It's like a business survey.
Okay.
So it's, how are the feelings in Germany of the current business climate, of the future expectations, and that is generally, 80, 85 is quite a low reading. It's more like 100 is the benchmark, like your PMIs when it's 50.
Right.
So we've got that today in Germany. That's an important one to see how companies are responding to that huge injection from the government as the fiscal break's taken off. Then we've got house price index, Case Shiller, and the Richmond Fed.
And
coming out later on.
We have reported overnight. Rich, please accept this as a formal apology for making fun of your Vodafone addiction. So I will compensate it for you by highlighting the earnings of another stock that you very much like, WH Smith's.
Are they out?
They're out. And organic revenue plus 9.1%. Estimate was 8.94. And adjusted operating profit was up as well. Some people call that
in line, don't they?
I mean, they beat expectations. They did well.
The stock has been weak, hasn't it?
The stock has been weak. They're doing the restructuring, focusing their efforts.
And then, we don't have too much. Is that this morning?
Yeah, I have it from the RNS this morning.
Okay. And then they've got, completes £200 million of private placement.
Yeah.
Interesting. Right, we'll be back after the break. We're going to give you the comment on Bellway. And then we've also got Fever Tree numbers were out, Kingfisher were out, and
THG and THG.
And THG. So we'll have a really quick 2-minute break and we'll be back with summary of those before the market open. Oh dear. Welcome back, welcome back. So you could see the confused look at my face before the break because WH Smith have not reported numbers. Smith's Group have reported numbers. I was so confused. So Smith's Group have had good ones, but of course they are talking about breaking the company up. So we'll go to them shortly and see if there's more information there.
Let me just put my hand up and say, my apologies. I messed up, guys.
But we like that. People put their hand up. I made a mistake, you know.
Yeah.
There is, and Andrew McKelvey picked it up. Thank goodness you confessed, because Andrew's there watching you. Right, more importantly, Bellway. Let's get the Bellway numbers up for you. Reaffirms previous guidance with full year 25 numbers well underpinned by a very strong order book. We've got right, Numis. The Numis view on this. We do not think Bellway's recovery potential or the potential to release and return capital is reflected in its 20% discount to full year 25 NTA. They retain, that's Numis, retain the view that Bellway looks one of the best placed house builders to grow volumes and recover profits, and management expect to deliver 20% cumulative volume growth in 2 years to full year 26. That's the Bellway.
Well, yeah, I mean, I wasn't super impressed by the results, but if Numis thinks it's a good one, then we'll have to go with that. And Rich, do you want to do us the honor of doing the bell today? Because
go on, I'll hand it over to you. I'm busy trying to sort out WH Smith or Smith's switch chart to get up. I'm not sure which one. Dear me. Right, let's see what we've got moving and shaking this morning in the world of European and UK stocks. The FTSE's having a little bit of a lie in there. We know that it starts a random time anytime after 8 a.m, but we're only just getting the stocks opening up now. There we go. Smith's Group, that is Smith's Group, not WH Smith, up 2.5% on the back of those good numbers. And Virgin Galactic up 7%. There's a random one we haven't heard from for a while. Lloyd's back up to 73 pence. Lloyd's Banking Group back up to 73 pence.
And what about our favorite tweeter-in-chief, Trump Media?
Let's stick on the European proper stocks first, shall we?
Sorry.
Right. Bayer.
It's up 10.5 for anyone wondering.
You think people don't care about Vodafone, and you're talking about Trump Media.
It's up double digits. Anyhow.
Right, Vodafone up 72 basis points, recovering from the pummeling that it got yesterday. We're seeing Tesco's, where you get your best clothes, up 50 basis points. British American Tobacco, we're only looking at stocks right now. Puma up 1%, BMW up 1.3%, Mercedes up 1.2%. It's a relatively positive start, isn't it, in the old cyclical world?
overall it's been quite positive, especially for this sort of the names they've been struggling a bit lately. Tesco, I'm very happy to see it up. I bought a dip there. Him and hers up 80 basis points, fueled by Rich's new subscription.
Don't even know what it is.
Oh well, we'll look that up later. What else do we have moving, shaking and baking here?
Probably any other stock other than that one. We've got Bellway up 1.1%, £24.60 on the back of those numbers. That's dragging up the other names in the sector. Persimmon up 1.4 and Vistry up 1.2.
And one that sticks out to me is RWE in Germany. They're up 1% after Elliott Capital. They've taken a 5% stake there.
They've taken a 5% stake in RWE and it's only up 1%.
Well, I think it came out yesterday, so it's moving on those news.
Interesting. RWE, great company. Great company. Great company. There we go. 24th of March. Elliott discloses stake in RWE. Wow, that's really interesting. I'm amazed that hasn't moved more on the back of that over the last 24 hours.
Wow.
Looking for a big buyback. Urging the German utility significantly increase its buyback. Of course, RWE, for those that haven't heard of it, was originally quite a big polluter in the German energy, but they were one of the first movers to get into renewable energy. So yeah, RWE, originally a coal name, now also a bit more integrated. What do we have on the negative side, Ronnie? What are we seeing going down? HSBC down 80 basis points.
Yeah, I mean, the banks in general had a pretty good day. Rolls-Royce are continuing their downward spiral. They were down 1.3 yesterday. Ferrexpo, I think they've been doing quite well with the peace talks surroundings. Rheinmetall, your favorite. I'm sure you're happy to
Money coming out of.
I'm sure you're happy to see that. Are you short Rheinmetall?
No, not short Rhine, only BAE.
Only BAE. It's a bit worrying that Kingfisher is not open yet.
Ooh, right. Now, Kingfisher, I was told that the numbers were in line, but it looks it's looking down 8%. Let's dig into that closer and see what news Kingfisher has come out with. Okay, this is a warning on the UK consumer and on home improvement. 7% fall in annual profit, weak demand for discretionary big ticket categories. Interesting that this one is looking, to get, well, it's really going to get screwed down, isn't it?
Yeah, and I think companies like Kingfisher, because they're a home improvement retailer, right? And I think this will have, you can use this sort of as an indicator to look at how this will affect the broader market of housing, real estate. So it's a bit worrying, I have to say.
Well, that's, yeah, if it's looking down 8%, we'll get it open any second for you now. Maybe if
Lloyd's,
if you ring your bell again, Ronnie, they might open Kingfisher for you.
Let's see what Lloyd's are doing. They're up 1.3%.
255, I'm told Kingfisher's trading. 255, that's yet to be, there we go. 50 to 1. 250 to 1 Kingfisher. We used to make this in 1 million shares in a morning like this.
Easy money.
But you would be very careful this morning because, 54 to 5 now. What do you want to do, Ronnie? What do you want to do? Buy, sell?
Kingfisher, trend is your friend.
The trend is your friend as well. Well, let's see what it's done over previous sessions then. Give you a bit more in the daily chart there. Has had a recovery. So it's only back to where it was 6 days ago, despite those poor numbers. Right, well, watch that one as we go in. Let's see if there's any read-through to some of the other retailers as well. Not at this time. Nothing else taking a hit, even among the big...
It's keep ticking down, mate.
Yeah, it's trading around that 50 level, isn't it? What's the name? Not Taylor Wimpey. What's the stock that trades on the back of Kingfisher, starting with T? Travis Perkins.
Right.
God, thank goodness I took my lion's mane this morning. A lot of help you. Travis Perkins up 50 basis points. Right, it's already had its own move lower. But yeah, if you're in Travis Perkins, just watch that one this morning with Kingies down.
But if you want to talk about a company that's gapping up, it's the black horse of Lloyd's.
Is it really? Are we on breakout? 1.4%, 73.5 with Lloyd's now. Is that back to go out a little bit further? Because I think it got to 74 pence, didn't it? Stick it on like a 3-week chart, and let's see if we're actually breaking out or we're at that resistance level again, please, Ronnie. So yeah.
Is this my chart up?
Yeah, that's yours.
Oh, sorry, I was just looking around myself to see.
Who we're talking to. That's a really nice cup and handle there. We like that, but
so we were at these levels.
Yeah, let's. Oh, sorry, that's
up here. Sorry.
Okay, right. Let's come off Ronnie's chart and we'll have a look at a proper way to look at a recent. So there we go, guys. If you can get up my screen, please. Let's have a look where the important level is. It's 74.30, right? 74.30 is where the official breakout would be on a close. We're currently 73.40, but the stock is up 1.5%.
I mean, it's continuing the upward trend from yesterday that all the banks had, and it's positive to see that Barclays are also continuing the upward trends today. So they always trend in pairs, sort of. That's
a very good. Take us to the upgrades, downgrades, please, gallery, and we'll see why Barclays is up. There it is. JP Morgan raising them to buy with a £4.10 price target. Barclays trading £3.06. Decent upside, 30% upside there.
Yeah.
Also taking Deutsche Bank up at JP Morgan and Redburn with their upgrade in Air France.
But this continues what we've been talking about, right? That the European banks, it's now their time to shine. The American banks, they had their uptake, they had their massive uptake after the Trump election, but now they're steadily giving back those gains. But now the UK and the European banks, they're the ones on the uptake. We had Societe Generale moving upwards previously as well, and BNP Paribas. So good news for the banks.
Right, let's check those Americano stocks then. Let's see, we've only got a few days left of the all sessions. What is happening in the stocks that people care about? That's not Trump media. It is Tesla continuing up from yesterday, now to 83. Not too much else going on there by the looks of it. The Chinese stocks are
taking a beating. We've got JD.com, Alibaba, they're down. Baidu is down. What's Tencent doing? Could be interesting to see. But yeah, overall, the big Chinese tech names are taking quite a beating this morning.
I wonder if JD Vance was a stock, what his share price would be down this morning. I wonder how much is down in the White House. Right, Palantir down 50 basis points. Getting back towards that 100 level though. That's been one of the real volatile names, touching as low as $76 and now 96, just from that normalization.
I'm a buyer of Palantir at 60.
At 60?
Yeah.
Are you short puts there?
No, I'm just going to go all in. Pull the entire ISA in there.
Well, it's easy to say when it's at 96.
Yeah, but I'm saying when it comes down to 60...
Put your money where your mouth is then, sell some puts.
I'll think about it.
Right, Intel down 1%. So that's... Intel just continues trading at the 24 level. It out lower, and then back.
What's your take on Intel? Because I'm not really bullish on them in any sense. I think the best hope that they have a turnaround strategy, but that's not like turning around an oil tanker. That's like turning around an entire fleet. Intel, I think their best hope is to breaking up the business and selling it. But yeah, I'm not very bullish.
That's in the plans, isn't it?
Yeah, but if they can get it through, and if they can sell to non-American buyers, which will be even a bigger issue for them.
Yeah, not too much else going on. We saw Nike come off yesterday. That traded into the 66s.
I was just going to say how our favorite Nike is doing.
Yeah, well, it's about the right price. That's what we said yesterday. It should trade between 67 and $70. You know, that's just how the outlook is now. So we take another 3 months there. I am, pretty much short straddle at the 67.5 level. Okay, so for once, Europe's actually more interesting, with Bellway up 3% now, and those home builders really gaining.
Are you out of John Wood Group?
I am out of John Wood Group. Yeah, I owe you lunch for that.
Yeah, you do, mate.
That was a good one.
That was prime brokerage right there.
Proper value added. So yeah, we got Ronnie's favourite Vodafone up 1%, along with SSE. SSE gaining back some of the horrific losses it had post numbers as well.
SSE is my personal favourite, mainly because of where they're derived, where they come from.
There you go. Now he's talking sense. JD Sports. What do you do with JD Sports ahead of numbers on Thursday? Tricky, isn't it?
Yeah, I mean, the thing with JD Sports is I am absolutely not a believer in their business and what they're doing, and I don't think they're gonna continue to do well. But also, how much further down will they drop? That's the question. We do see some sort of resistance in JD Sports, but yeah, I would probably sell a few calls.
Yeah, good luck. There we go. So there's about a 6-month chart of JD. Oh, it really needs to find some support, doesn't it? 71 we've seen. That's about as much support have you got. So that's going to be an interesting. Watch out for that on Thursday. But in the meantime, not seeing too much. IAG's unchanged. We've got Rolls-Royce still around that Boeing 787. Did you see British Airways has got a new business class?
Oh, really? No.
Yeah, now that's one worth getting up. Where did I see this? I think it was in the...
While you get that up, I'll listen to the interview with the Boeing CEO yesterday by Guy Johnson at Bloomberg, and it actually gave me. I've been not Boeing, Airbus. Talking European.
It's not like you're getting things mixed up today,
No.
WH Smith.
And no, I only had 2 cups of coffee this morning. Anyhow, the Airbus CEO was talking about the sort of future of the company, and it was nice for him to sort of remind us that they're not only an airplane provider, right? They're also the world's biggest provider of helicopters in terms of service and units sold, and they're also a big player in the defense sector. Airbus is a company that I'm going to be looking a bit more closely at.
Carry on.
Yeah, you still haven't found the article, have you?
Interesting.
Still haven't found the article. Yeah. So Airbus, if you look, they are now also launching a partnership with the Italian defense company Leonardo to start a joint venture to develop European defense products that are best in the world to compete with the Lockheed Martins and the Honeywells of the world. And Rich has finally done us the favor of showing us the business class that none of us ever will travel on.
Yeah, in fact, it seems to be somebody in the shower there. Do you think you get... No, that can't be a business class. The new BA Suite has a
2-meter long bed
that converts to a 2-meter long bed. Why do you need a 2-meter long bed?
So you can, snuggle around there, mate.
What, are you going to sleep sideways?
Listen, I I was gonna say, so it's room for both of us, but no. Okay.
What a horrible thought. I'd rather fly Ryanair all the way to New York. Right, we've, Kingfisher continuing its move lower. Kingfisher now down.
10.8,
Well, it was 12. Yeah, it's interesting. A little bit of support at the 249 level. And Smith's down on the day, down 1.3. People wanting more from that set of results.
Question is, are you buying the dip or are you following the trend here?
Very tough one that is. Let's see the mining stocks for you, as well as some commodities. We've got Antofagasta down 20 basis points, not really continuing the march higher. Anglo's unchanged. Glencore trading the high 303s, with the iron ore names lower, and the Australians down 50 basis points.
What do we have in the comment? BT. BT is a company I'm actually quite excited about because they do have the defensiveness of a telecom company. But one major bullish signal is that the biggest owner, Mittal, is looking to increase his stake.
Mittal. Not Lakshmi Mittal. Let's look at that as part of fast markets, shall we?
Let's do it, mate.
Look at BT.
Let's look at BT.
British Telecom.
Anything else you guys want us to cover? Any suggestion is welcome if you want us to cover it in the fast markets. Anything but Vodafone.
So Monkey Man has ordered you to do AMD.
AMD, we'll look at that.
That's right. So we're going to go to a quick 2-minute break, and then we shall be back in for or shall we go to it with no break? How about that?
How about we just go for it?
Go on.
Bada bing, baba boom.
Right.
Fast markets. Okay, you know what? Because you're the telecom guy. All right, Rich, you're the telecom guy.
Yeah.
Tell me about BT.
Well, God, it's at 165 now. Gee, I see. Sorry, Steve Davies, I see exactly what you're talking about. BT is breaking out. And that is exciting because, of course, the new CEO came in and warned all the shorts, do not be short my stock. And she said it. And she's now backing it up.
I like it.
That was this move back in November. And then we had the problem of one of the main stakeholders. Then they exited. And as you say, Mattel came in and boosted the stake from Barty. Is that right?
Yeah, from the French-Israeli Sotheby's owner.
That's who they took it from, but it's Barty Telecom, is that right? That
could be.
Mattel's
I take your word for it.
But anyway, bought the stake that was really weighing down on the share price. And you can see what's happened since. We've had, that 165. Telcom's trading cheap across the board. So if I don't think I could buy this one here, but I definitely wouldn't be short in a pair trade against Vodafone. No,
I wouldn't. I wouldn't trade Vodafone, period. But I do think BT is. I think BT is an interesting stock because I like. They have this sort of exposure, and they're also partnering with. Not partnering, but they have the exposure to the sort of the network, and they're quite well positioned to gain from the sort of business and service sector growth.
Yeah.
So BT, we like it.
Okay, now Monkey Man has ordered you to take a look at AMD, my friend.
Yes.
Recovering quite nicely from that downward trend, isn't it?
Yeah, I mean, I think AMD, they've been sort of. First off, they've had an incredibly strong rally leading up to the peak that they had, much due to the works of Lisa Su, the CEO. She's done an absolutely brilliant job in turning around AMD. Mm-hmm. But I think they've been sort of unfairly punished a bit, much like all the other tech stocks in this sector, especially the AI sector. They've been taking a bit of a beating after overvaluations in the past year. But I do think that AMD are doing a really good job at sort of filling the gaps in the market where Nvidia are not there. So I am quite positive on AMD. I don't think it's going to be a short-term trade. I think it's something that you can perhaps take a bit of a longer view with a strong upside. We got, what's TipRank saying? 29% upside. I think that's relatively fair. I would follow in line with that.
Let's see what Dan Ives is saying. Where is he? See, he must cover this one. Interesting. Nothing from Dan Ives on there.
But overall, the sort of consensus and sentiment, not only across the analysts, but also across the hedge funds, is increased bullishness in this stock. Okay, so Rich.
But have you got a brother or a sister?
Yeah, one of each.
One of each?
Yeah.
And what is your brother older?
Yeah, both of them are, yeah.
More successful?
Yeah.
So you are AMD.
Right?
You are.
I'll take it. I'll take it. AMD is great. My brother is very much NVIDIA. He's the favor of the family. When I asked my dad my dad wanted to reset his password, and then obviously he's typing like this.
It's probably your brother's name.
It was my brother's name and then his name and then 1, 2, 3, and I was like, yeah, cool.
Ronnie, I will make you my password.
Oh, thank you.
Right, so yeah, AMD, an interesting one. I don't know what I would do in options world.
Okay, but Rich, you're my broker now, right? So I believe in a relatively strong upside in AMD, but I don't think you'll come in the next month or two. I think you'll take a bit of time. Let's say end of summer. Can you give me an option strategy for me to sort of profit on that upside without having too much, risk now in the short term?
And what is your timeline, sorry?
Say 3 months.
A 3 month, okay, so let's go out to, now we know Sosnoff likes 45 days, so I'll extend you out to May the 16th.
May the 4th.
Be with you. And what we're going to look at, I believe that there's a nice bit of support in there in AMD at $100, right? That has stayed so far. I still believe in AI. I don't think that's going anywhere.
Agreed.
We might get some chip stuff from Trump and his circus, but I still think hundreds at AMD holds. So I'm going to take that 240 in premium by selling that put, which we learned about yesterday in Market Measures, in the Beginner's Guide to Options. We receive that 240. I'm going to take that 240 and I'm going to spend it. And I'm going to spend it on upside. And that upside allows me to buy a 120 call, right? But I'm Scottish, so therefore I don't like paying for things. So I'm going to try and minimize, because at the moment, $5.50 minus, oh dear, taking some stock there, right? So yeah, $5.50 minus $2.40 means I'm left paying $3 for that position, right? Now that is called a risk reversal, because I'm selling a put to buy a call, but what I'm going to do is I'm also going to sell a 135 call. So all I'm benefiting from is a move above 120 to 135. I'll take that 13.5%.
Yeah, I'm very happy with that. I'll take the trade.
Now, that only costs $1. $1.20.
Only a bloody dollar, mate.
Only. So we can get $14 of upside from investing $1, and that is a trade that I like for May. Might even do that this afternoon.
That's why they pay him the big bucks.
Now, one quick one that I did that was similar last night was on Starbucks, but on the downside. A good friend of mine, very well regarded analyst, believes that Starbucks could half.
Oh.
Could half.
So he's not a believer in the turnaround.
Not a believer in Brian's turnaround. It's the numbers and the valuation at the moment is already giving a little bit of a hope that is not going to be realized, because the coffee tastes like. And it's too expensive as well. So what we looked at was buying an $85 put, selling a 70 put, right? So he thinks it's going to half. I'm saying normally when research analysts say something's going to half, it can go down 30%.
Yeah.
Right? So 85 down to 70, it's currently at 95. But I financed that by selling this call. Now, I got that on for nothing. So I spent $590 on the put and then took off the 235 and the 364. So that was a zero cost option strategy that we're looking at. Talking about options, we got Matt Arbour outside, our big vol trader here at IG. He's going to be in 2 minutes to tell you all you need to know about markets today.
Hey, welcome to Trade Live with IG of myself and Safe Harbor.
Morning, Alex. How are you?
I'm very good indeed, and you?
Yeah, good.
Yeah.
Another sort of, morning where market's on a firmer footing. Always good to see.
Yeah, and you're right, the kind of like vol coming down, we're now seeing this new rebalancing and we're certainly a really mixed start to the day.
Yeah, well, it's like vol coming down, but we're still seeing good net changes. There's still movement there. I suppose the standout yesterday being the Tesla 10% bounce after a torrid few weeks there if you're long that stock, but a decent move up yesterday.
So whack that up for our trader friends to take a look at the move that we were talking about yesterday. Yep.
So yeah, but very much this. Softening of vol in general. Obviously, as we spoke yesterday, Trump seems to have paused his prolific tweeting to give the markets a rest.
Yeah, I mean, on the one hand, we talked about this yesterday. The fact that he didn't tweet so much and everyone kept quiet kind of meant that the markets, maybe he's caught on to the fact that if he doesn't make too much noise, markets calm down.
Well, this is it. Either that, or they're all doing it between themselves in these. Whatever it was, Telegram groups, or whatever the funny app they were using that wasn't WhatsApp.
Closed room or something.
Well, this story where there was the journalist in on their closed group as they discussed successive bombing raids.
And you can only be invited. You can't.
Well, yes.
Yeah, can't gain access to this room.
But anyhow, whatever the markets, again, volatility is as softened as There's not a lot expected this week in the market, and often what we see there, particularly after we've seen the sort of aggressive sell-offs that we've seen over the past few weeks, a minor rebound and a drift back higher as people dip their toes back into the market.
Yeah, and we are certainly seeing a dipping of the toe back into Germany. 40 European stocks also having a bit of a move higher there. They definitely did so ahead of that. We're waiting on that IFO. Any expectation, gut feel about what you're going to expect? Any
German business confidence isn't my strength.
But this will be the first one after the Germans came out saying we're going to loosen the coffers now, people. Calm down. We're gonna boost growth now. We're actually going to spend to get growth back. So, this is...
Well, yes, I suppose it's interesting. I think we remarked yesterday that the market's looking a bit more at that consumer side of it rather than the headline numbers, given that the central bankers are not doing anything for the time being with rates. There are no surprises coming out there. From that UK perspective, all the consumer confidence data has been relentlessly negative for the past few months. The government's talked people into a recession. It's not helped by making, the sort of...
You're the one that came on and talked about potholes late last year.
No, I didn't talk about potholes.
Maybe it was Luke or someone else that said, this kind of insidious, not just not doing anything about the economy, but, people talking about potholes.
Luke's just taking his content off today on Radio 4 if he did that yesterday. I think he's just stolen a slot there.
Yeah. But, and then maybe Starmer's been listening, because now Starmer apparently is his biggest, newest bugbear is we've given the money to the councils and now they have to just fix these potholes. Don't just talk about it and point at it. Was the message?
Well, it's kind of one of these great theorized economic models. You employ people to repair potholes, they do it badly, which is the complaint, and then there's more employment. So it's this sort of recycling of the public money and getting people working. I don't know. It's sort of the odd economic model.
Yeah. Speaking of recycling, we are seeing this recycling of themes this week. I feel like you and I, deja vu. It's only like Tuesday, but I feel like we've
there are no new ideas.
Yeah, Trump saying, Monday, not all of his threatened levies would be imposed on April 2nd, and some countries may get breaks. That then, helped spark this rotation, right, into cheaper, discounted US stocks now.
Well, and I think in the past where we've had these stated dates, they've not been a cliff edge event, and the market's stopped believing that there is a cliff edge. I can't remember the last, but tariffs were coming into effect on X date, and everything rolled back before then. So the initial belief that there is bark as well as bite has you know, the market's decided that no, Trump isn't actually doing what he says he's going to do in a lot of these cases, particularly not on the date. So that uncertainty, the sort of I suppose whether it's a buy the rumour, sell the fact, or whichever way you look at it, there's less this sort of belief that the supposed intention is going to happen on a set date. People aren't positioning themselves for that; they're positioning themselves against it almost.
Yeah, and there's a saying, isn't there, in the markets? You know, for a sense of direction when there is absolute chaos or directionless waters at the moment, look to the forex markets.
Yeah, but again, they've been very quiet.
They have.
They
have been very quiet. I'm glad you said that, because I'm whacking up the US dollar, you know, basket here, which is, you know, a Dixie, and .dxy, depending on what terminal you use. And we are seeing, you know, this kind of almost like a base being formed there, not moving by much. Euro dollar looking a bit more interesting from the vol front, you know, implied volatility, suggesting that maybe this cross remains under pressure.
Well, but even so on euro dollar, where again over the past 2.5-3 weeks we saw really quite elevated levels of volatility on this cross. Sort of for people who've been trading euro vol for a while, sort of this time last year, euro vol was languishing around sort of 6%, heading towards sort of record lows. The past 3 weeks that was tending towards double figures, 11-12% on certain days. We were seeing really sharp moves in the euro. That vol softened, you know, come sort of right back off. We're drifting, you know, sort of these eights less than 9. So we're not as low a vol as we were seeing last year, but we're well off. We're sort of 30% off the highs seen in the past couple of weeks. Again, reflecting, I think, yeah, they're looking. That's quite far out. That's the 4th of April we're looking at there. So
let's go back one, shall we?
Yeah. If we look at
that one,
a Friday kind of expiry. So there we go. With at the money straddle, there's sort of 75, 80 kind of price. So that's reflecting the number of points one's expecting. Euros range to be into the 28th. So that's the end of the week. So 2 weeks ago we were seeing 100 points a day on the euro, and it was winging around, and that was, you know, exciting to trade again, which isn't often the case on euro dollar.
Yeah, and we're now sort of back to more sort of normal levels. The other big one that is really kind of moving the markets, just showing you my watch list, because we talked about this earlier as well. Always really like trading house builders because they tend to move together as a group. Seem to be having a good day. Bellway.
Well, how's Kingfisher in your UK house builders?
I always tell everyone that I have that in my watch list because they are related. So I like looking at those stocks because I trade B&Q. I'm a huge trade Kingfisher, but I'm also a huge customer of B&Q.
Is that your average Saturday in the aisles of B&Q?
It is. Last weekend, I am not ashamed rather, to say that I was one of those crazy people that was buying plasterboard and then got suckered into, it might be spring soon. And I bought this huge plant and then realized I couldn't get it into the car. So
I'm not intrigued about the plasterboard buying. There's some serious DIY going on there. You're doing your own plastering?
I do. I've tried plastering. It's the one thing that I will not do, actually. I'm very good at tiling. Okay. Detail work, very good. Yeah. I can now put up, I have evidence of this actually. Producer Phil, how very dare you? They're all in my ear going, have you got evidence of this?
Well, this is true. Lots of people say they're very good at tiling, and you go round, you know.
Oh, right. They're just asking whether I've got evidence showing me doing the tiling. You can come to my house and have a look.
It's a proposition on it.
But plastering is a skill.
Plastering is
it's just heavy, and by the time you get it to the top, the mix is going off, and there's so much going on that you can't have it too dry, you can't have it too wet. You have to have it wet enough so it's still malleable, and then God forbid, just when you think it cannot get any worse, plastering ceilings is another.
Why wouldn't it? You wouldn't even try the plastering a ceiling. You've tried plastering a wall. You're not going to try plastering a ceiling, are you?
Yeah, but I found a really good plasterer who used all his wages, because I paid him on a Friday, go to the pub and completely drink it all, right, immediately. And he was an excellent plasterer. But he
liked getting plastered.
We like getting plastered. Good one. Yeah, but I did give it a go because I do think that hiring staff of any sort in this country very expensive. And so, yeah.
That's why you sacked your butler.
I don't have a butler to sack, unfortunately. Okay. Not like your world. Back to the markets then. Back to the markets. What I do have.
House builders. Here we go.
House builders. Let's have a look at the chart here. Bellway up 1.16%. We had news earlier on this strong half-year profit, 150 million pounds, up 12% versus a year ago.
Well, it's obviously twofold, isn't it, with the UK house builders? It's as much the government policy. This appears to be the kind of directional SOP, like we're going to cut welfare, but we're going to channel money back into building. Our target of, I think, was a million new homes when we struggled to build 7,000 homes a year in London.
We always get big numbers, and then
big numbers,
and then it gets taken back. Yeah.
But anyhow, UK house builders are generally the main recipients of that money into encouraging the house building growth, and trading these stocks is often a political play. We have some clients who only trade house builders here. We've got some clients like Luke's client only trades banks, just UK banks all the time. But it's a great play on UK interest rates as well, right? UK house builders. What I find fascinating about this is not so much the fact that they've risen, but they've risen despite the fact that Bellway did actually say that the market still looks constrained. But they have been beaten down, it has to be said. The Barrett Red Rose, let's have a look there. This is the daily chart there. But as you can see, if I go further back, they have. There is a lot to be said by that. This concept of specialising, picking a set of stocks or a sector, and only trading those. There's a lot of cyclicity amongst them. You get used to watching what price action looks like. Where there might be an overreaction, where things perhaps haven't reacted in tandem with the rest of the sector. The concept of I'm going to spend my whole trading time concentrating on these, even though they're not the most exciting of stocks. We all get carried away saying I'm going to be a MicroStrategy trader. Fun, but Bitcoin. Good luck. Exactly. you stick on UK banks, UK house builders, UK utilities, these kind of things where the volatility is a little bit lower, but there is perhaps opportunity to be seen because they are not the frontline stocks that everyone's trading. There's that concept of an edge to be had because you are the person looking at them. Yeah. And over time, you do get a real sense of the ebb and flow as well. Completely. Of the feel of the market, which is why I like grouping them together. Because quite often when you see the house builders not do well, and you see that crisscross with bad economic data showing the economy is sagging, we tend to have the Taylor Wimpey's and the Kingfishers 3 months or so after that sagging in tandem. So I quite like having them in one space. I know they're not house builders. I mean, I can tell you where not to buy plasterboard. That's how crazy my life is. Also, speaking of crazy, what I do have in my shed is a bottle of original Roundup. Roundup, get rid of foxes, yeah? Roundup is that stuff that's like the spray you put to keep animals out your garden. No, you kill weeds. Oh, you kill weeds. Okay, it's the other one, yes. Yeah, and my goodness, that's why you've got such fair hands and soft, supple skin.
I do all my own gardening as well. Bayer has.
Okay, this is a good segue. There we go. Said to Bayer in Germany.
Bayer, taking a look at its shares because.
Okay, so Roundup contained a weed killer that got banned, was it? Is this?
Because it caused cancer.
Yeah.
And
like everything.
yes, breathing. But the pesticides maker, has been ordered by a US jury. Finally, they've put a number on it now to pay around $2 billion to a plaintiff who claimed the company's Roundup weed killer caused his cancer. From memory, I think this person worked on a school or something and had to continually make sure that the grounds were maintained. And it was back in a time when, these weed killers did not have any sort of warning label or anything like that, and they were just chucked everywhere, and everyone was handling them without gloves and etc. So I still have a bottle of the original, which is the one that's banned in the US now. I don't know what to do with it because someone said if you take it to your local disposal site, they just chuck it into landfill.
Probably.
So that's not helping.
It's not helping. I don't know. To buy it, but isn't the story on Bayer more one of energy costs? This is chemical stocks. Energy is your principal cost in producing any industrial chemicals, and gas prices in Europe and German energy policy not conducive to the performance of Bayer, lawsuits or not.
Yeah. No, I mean, and also they ring fence this bit of the company, right? But you can see the shares change direction now because it was falling in pre-market, but having a look now, it is up 4.08%. Maybe there's some relief there over the fact that it's been sorted.
Yeah, well, it's certainty is always better than the uncertainty, isn't it? However large the payment.
Yeah. Speaking of certainty, let's cross over to gold now. Having a look at gold there for you. How is it looking? We are seeing a slight tick higher. This is 1 minute chart, but let's have a look at the 10-minute and then we'll zoom out because it is moving lower compared to where levels we saw yesterday.
I was going to say the interesting thing with gold, which I often notice, and maybe it's a sort of a confirmation bias or whatever it is, that gold often has a large down move on a Friday.
You think so?
It does. Just look at that on the chart. The incidence of the sharp move on a Friday on gold. I don't know. This is an actual thing. I'm just throwing it out there, but it appears to happen more often than not that the down move of the week will be on a Friday. I have found. Whether there's anything to be ascertained from that, I don't know, but.
You're right. Yeah. There seems to be a dance. I love that.
There's very much. There's trading gold here. Trading gold on gold.
Gold tip from
gold tip. But again, it was after a week of strong gains and still holding that $30. Again, the gold. You look things that you never thought or things you talk about happening. The gold price approaching the silver price. These sort of strange numerical quirks. I remember back years ago, everyone used to talk about Bitcoin overtaking the Dow, which of course now is long past. But that was always the Bitcoin evangelists were in a month's time, the price of Bitcoin will be higher than the price of the Dow, kind of thing.
Yeah, and now we look back. Hindsight's a beautiful thing, isn't it?
Well, yeah.
Let's take a look at oil as well, because oil is interesting in that it is, it is slightly higher, 0.3% higher. Brent crude up about the same amount as well. And just adding that to the workspace, so you can see that a bit better. How much time we got, producer Phil? We are up 0.4% at the moment, and it is trading currently, well above the March 5th, 2025 low.
But again, crude's one of these commodities that's kind of taken a back seat. There's not the excitement. Crude isn't where the big moves are at the moment. It's sort of languishing towards recent lows, and we're not seeing the volatility in crude that perhaps people have been used to.
And in fact, what we're seeing is like a almost sometimes at the moment sideways move. Weirdly, I'm gonna write that down in my diary in my goals section, so trading diary. Friday now. About Friday. Crude and specifically WTI. I find that for whatever reason, a good time to trade it is between our time 3:30 to 4:30. It just has if you're scalping, it has a good momentum. It doesn't flick everywhere.
Yeah.
And I don't know what it is with that time.
Well, again, but these are all these things that as talked about trading like UK banks or UK house builders. Those little nuances, whether they're real or not, but those times where you feel there's something that you've seen and you know, hanging on to these little tricks or these little moves and keeping that consistency and that you know, that feeling of what the market, being immersed in a single market rather than flitting between the flavour of the moment is a key to greater success. You know, that feeling more in tune, so you're used to kind of the rhythms of the day on a market, or you know, what is normal, what's not normal. As I say, it's very easy to be drawn in and see something that's had a large move on the day and think I'm going to trade that because that's where the opportunities are. Actually, that's going to be much more of a random walk. Everyone's looking at that. You know, you're trading the high volatility. The chance of picking a top or a bottom there is much lower than if you're looking at something where you're used to and you have the experience and the ebbs and flows.
Like when you asked me the last time, what are you doing with the peso? Why are you asking me about the peso?
Why is your head turned by the peso? You know, you're bringing up a Turkish lira chart in a second and saying, look at this. It's
Neil on the chat chiming in saying gold moves most on Fridays, according to Larry Williams. So there you go.
Larry Williams, shrewd guy.
Given not as shrewd as our safe harbor, who's you know, I've just looked at the gold chart last few Friday sessions. Right, tends to go lower, which means I'll keep my short position on it. Gavin Acker saying
Tuesday is no good to you.
I know, back up till there. Gavin Acker saying latest Trump quote. I may give a lot of countries breaks on tariffs. Source financial juice. Yes, we mentioned that one earlier. The problem is he keeps backtracking and then, you know, moving. The only thing that hasn't changed yet is the date.
Yeah.
April 2nd.
Yeah.
That's the only thing that hasn't changed. Waka Waka saying dollar index going to all-time lows. And a lot of people chiming in on the house building. How about getting rid of council tax, says Waka Waka. We have to wrap up now, but adding that one in.
I'll still take my rubbish away. I'm not sure where you square the gap there. But
All right, on that note, thank you so much.
Thank you, Ange.
We will see you guys. Keep your comments coming through. Stay where you are. Actually, you can go where you want, but keep listening to us. Market Measures is coming up next.
Welcome to Market Measures. So, there's nothing more fun at school than when the teacher used to wheel the television in and you'd have one of those classes that was just watching a movie. Well, this is our Market Measures equivalent. Every Tuesday, I am going to go through my portfolio to show you I'm putting my money where my mouth is. That's right, all the theory that we go through, we talk about delta, we talk about theta. Well, I am going to show you every Tuesday what I'm doing in my own portfolio and how I'm following the lessons that we go through for that week. All right, so let's dive straight in. Let's look at this tasty portfolio of mine at the moment. There is the wonderful screen that we see, and I'm going to take it in a little bit. Right, the way that I've got it set up, and this is fully, you can customize it yourself on your end, but the all-important P&L of the day, of course, is important there. So from the left, I obviously have the name of the stock, all right, the symbol, the price, and then my P&L in the day, the most important thing to me, the bid and ask of the option, the price that I traded at. I really like to see where options are trading relative to where I traded at. Then we've got the delta, right? So there is the delta. I've got the gamma. Now we've got to come on to that one this week. We're going to be talking about gamma in the next few weeks. We have got the theta and we got the vega. Right, now the next column is the IVR. That is the IV rank. We've been through that, and that is the magic number that tells you how the stock is trading relative to its own implied volatility historical, right? And then on the far right, we got the P&L that is open from the trades, from the history of the trade. Okay, so now I have ranked all these names by their beta. So we're going to be talking about my biggest positions at the start, right? So you can see there that we're going to be talking about Nike, first of all, that is $429 of beta. Then we've got 227, and that is going to be Deckers, right? And then it goes all the way down to hardly one where I've got hardly any delta here, down at only 9, and that's Eli Lilly. But how do I set up these positions in my portfolio? Well, let's have a look. We spoke about Nike yesterday, so let's have a look at Deckers. What am I currently doing in Deckers? That is, of course, the maker of Hoka and UGG. Well, this journey has been a bit of an UGG because the stock was 165 when I started selling puts. And I made this awful trade of selling the 135 puts, right? Now, that I sold for $1.76, and it's currently trading at $11.60, right? So that has been a horrible trade. And you can see that the overall loss on the trade is right along here on the right-hand side, $2,000, right? So I'm currently down $2,000. Yesterday, really good day, up 1,100 as Deckers rallied hard, up 4%. But how does that fit into the structure I have of the whole trade? Well, I now own 200 shares, so I'm long 200 shares. Against that, right, let's forget that one for a second. Against that, I've got a covered call. Do you remember from yesterday what a covered call is? That is when I sell calls against my stock position. So I've got 200 shares. I obviously think the stock's going higher. That's why I own the shares. But is it going to be higher by that significant amount in the next 23 days? That's right. It's only 23 days now until April expiry. Now, as we know, Sosnoff rules, at 21 days, you start making those adjustments and you manage your trade. So do I roll this? Do I roll them forward until May? Right, that's about 52 days away at the moment. Or what do I do? So anyway, I've got the 200 shares and I'm short the 130 calls against it. So the stock can go another another $5 higher, right? The stock can go another $5 higher because it's trading at 124. 124.68. Goes another $5 higher. And then you can see there that I would be selling 300 shares. So I've oversold the calls in a frantic attempt to try and make back some of the money that I've lost from this stock going down from 165. However, that's not quite as crazy as it seems, because if I just come out of those ones for a minute, you'll see that I am short 2 of the April 135 puts, right? So that means that at the moment, I'm long those. And we can look here to see I've got a delta of 154. Now that's a positive delta, right? Because it doesn't have a negative sign in front of it. So the positive delta on that position means that it's at the moment like having 154 shares. Okay, so I'm short 2 puts that is giving me the P&L attribution like I'm long 154 shares. Now this short position of the 130 calls is trading like I'm short 114 shares, right? So if we net all these off, and then I'm also short some 110 puts, that gives me a positive delta, right? Because the price of that put drops as the stock goes higher. Therefore, I benefit from the stock going higher because I'm short the puts, right? So that gives me positive. And then I'm also short some of the 140 calls. So I've got quite a few positions, but they all net up to this delta up here, which is 227. Oops. Right, a net delta of 227 long Deckers. Right, and then you see the theta. Now we've talked about the theta. That's $72 a day. Right, so I've got positive theta of $72 today because I'm short a lot of options. Right, all of them are short. You see that? Short calls, short puts, short calls. So they're all giving me theta. So that means if the stock doesn't move, then I'm receiving $72 as well, right? So that's Deckers. Now that's trying to recover a bad position because I've called that one horribly. Started getting long delta when it was at 165, right? Not long shares, long delta. And now you start to understand the difference. I got long delta by selling puts, right? I didn't buy shares. I got long delta by selling puts. Now, let's go on to Uber. Uber, this is just a clean risk reversal, right? I've sold puts at 67.5, and I did this when I was in Bristol University with the students. We sold puts at 67.5, taking in $1.42. And then I spent $3.11 on buying the 77 calls. Now, you can see the share price is almost there. It's at 76.45. So I'm starting to get excited. I'm starting to think if this market rally continues, then I'm long Uber and I'll benefit. And I'll benefit to the tune of a delta of 112. Right? Can you see you get into this lingo of if you understand delta, then you can understand options. I'm long Uber with a delta of 112, right? Now my theta is going to be negative. And why is it negative? Come on, let's hear you. Why is it negative? Because the long call position is costing me more money than I'm receiving per day from being short the puts. So you can see, where is it? I am short $12. I'm spending $12 of theta, and I'm only receiving 570. So that is Uber, right? We want that to go higher up through 77.5. Gold, I've only got a simple position. I've got to manage that a little bit because I took the higher leg off yesterday. So I'm straight out short the 270 calls. We bought them for $3.60. All right, I paid $3.60 for those calls. They're now worth $14. So that's gone really well. But I need to manage that trade now because it is it's sitting there a little bit out in its open by itself, and I've got quite a lot of money invested in that. You can see the P&L is currently up $1,000. So that's one to manage today. NVIDIA, our good old favorite NVIDIA. What is my net delta on NVIDIA? It's long 50, right? So long 50 net delta there. And that is made up from quite a few different options. See if we can get the... Right, so these are all NVIDIA. So the stock's now trading at $121. I am short 2 of the $100 puts, right? And I am long 1 of the 120 calls and short 1 of the 135 calls. So that in total gives me, do you see that position there? So the long $120 call is giving me 52 delta or 53. And then the other two cancel each other out, right? Don't you love when that happens? So that is just pure long delta of the 120 calls for me because the other two cancel each other out. The short put is giving me long delta and the short calls are giving me the short 13. All right, so that's those positions. Let's take those off. Now, what about further out? What about in May? Well, in May, I don't think it's going down below 100, so I am short the $100 puts in May. Yet again, we only got 23 days until these ones expire. So it's, is it time that I roll those out to May? Could well be. Now we go on to the big one. This is my big call of the year in NVIDIA options. I watched Jensen, I listened to the conference call, I read the transcript, and I do not think either of these trades is possible, right? I do not think either of these trades will go in the money. It is not going below 85 in my opinion. And it is definitely not going above $170 in my opinion. Therefore, I have sold a strangle for it to stay between 85 and 170. And I received $2.50 for selling the puts. And I received a crazy $9 for selling those calls. All right. Now, that actually gives me a short delta of 65. Look at that, for as high as 170 when the stock's at 120. What's going on there? And then I get 40 delta from being short the puts. So that's NVIDIA. I am, to receive 9 plus 250. So, almost 10%. I'm getting a 10% return for that when I put it on. Not anymore. Now you're only getting about 7%. Right, Broadcom. What have we got on Broadcom? Well, Broadcom, we are thinking that this one had a good set of numbers and it was sold off unfairly. So I'm very simply short the 165s and the 170s for April. Again, time to manage them. Coming up for that 21 days time to manage. I sold them at $4.75 and I sold the 170s at $7. So we've made a real nice profit from those, but most of the profit's gone, right? They're only worth $1 now, right? That tells you what the put's worth. It's worth $1. And yeah, that's given me a net delta of 25. That's up there, right? So that's the net delta line. And it's also given me $20 a day of theta. So that's really nice position. I like that one. That's just ticking over nicely and small. As Sosnov says, have a lot of positions that are small enough in size not to blow you up. PWR, I've got this one wrong as well. That, of course, is Quanta Services. That provides the big power lines and takes all the future energy to those data centers. I'm short the 240 calls there. Hasn't done too well, but I did sell them at $5.40, and now they're only worth about, well, $4.70 with the stock trading at $2.78. It has actually been down there and touched it, so that was getting a bit nerve-wracking, but I like the stock. Then we've got a 340, 380 call spread on there. DoorDash going into the S&P 500. I'm very simply short the 165 puts. Don't think it's going down there. However, I've got all the juice out of those, pretty much only selling $2 there. Microsoft, same, short the 350 puts, right? That's nothing really very brave there, saying that I'll buy Microsoft at 350. Eli Lilly's an interesting one. This gives me huge P&L swings. We're long one of the 840 calls, right? But that's $840. So it's much bigger than the others. It's like, you know, 7 contracts of NVIDIA is 1 contract of Eli Lilly. So this is called a call ratio. And what I'm saying there is I'm buying 1 of the 840 calls, but I'm short 2 of the 980 calls. So I want Eli Lilly to go all the way up to 979.99, and I will have a wonderful steak dinner on the back of that. Because that essentially means you're buying Eli Lilly at 840, you're selling it at 980, but then you're also going short at 980. So that's called a 1/2 or a call ratio. Now, how does a delta look on a 1/2, I hear you ask? Well, it's really interesting because I get a long delta on the call that we're in the money, right? So that's this 59. I get a 59 delta. But then I get the short delta from being 2 out of the money calls, and they're almost the same. So they almost negate each other, which means I get these funky P&L swings that are actually huge P&L swings in each contract. But when it nets off, then you see the deltas there is only $9, right? It's one of my smallest deltas. And it's a really neat way of playing the trade. Of course, the break even would be if it went up to 1,120 minus the premium that I paid for it. So I think I've got a really nice trade in Eli Lilly there. Then we look at Spider. Right, so a lot of that is long delta, right? A lot of that is long delta. So what do I do to negate that long delta? Well, I've got some index downside on the Spider, right? Mainly in this 571 put. So I've got 571 put for April. I'm also short the 600 calls. Okay, so I received $2 for doing that, and I had to pay $7, but then I also received $173 for this. So for 30 points of downside, I only had to pay $4. Right, we've got some questions on the chat there. Neil, I'll come back to yours. Arthur Foxhaig, is this correct? If your net 100 delta over a mixture of longs and shorts and options, This is the equivalent of being long exactly 100 shares. You can see that from the way that the Tasty platform's done. Now, where is it? My Nike, right? So I've got 100 shares there. Do you see it? 100 shares there. And that gives me a delta of 100, right? And if I bought 2 of the at the money calls, I'm just trying to see if I've got that exact position. Yeah, there we go. Right, so I'm short 2 of the at the money calls, 67.5. You couldn't get much closer. And it's giving me a net delta of minus 100. So you're exactly right, Arthur Foxhaig. Okay, so if I just only had 2 positions in Nike, I could be long 100 shares and I could be short 2 of the April 67.5 calls, and I would have a flat delta because they would knock each other out. But finally, before I come out and you get the wonderful Ruby in to give you all her latest news, how do I hedge a portfolio that you can see it's very long, right? I'm long 430 of Nike, 200 of Deckers, 100 of Uber, 65 of gold. Well, it doesn't matter so much. 50 of Nvidia. How do I hedge it? Well, I hedge it with these wonderful micro S&P options, right? Micro S&P options. I am short 3 of those. The micro S&P gives you short 50, short 50 delta on each one, and therefore I'm net short 153 from those. So that's my net short delta in the S&P, which hedges me. So if there was a big move down today, I'd lose money in most of these, but I would make a good amount in my micro futures hedge, and I would think, yeah, I'd make a little bit of money in my SPYs, I'd make a little bit of money in Palantir, and I'd make some money in Starbucks, and that would net off. So I'm hedged, right? I've got a nice hedged portfolio here, and that's the important part of portfolio theory. Arthur Foxhaig, I hope that answers your question. Of course, the stocks would have to move together, right? So that would be true if both stocks moved in conjunction with each other and your long position was down 1% and your short position was down 1%. That would be a net zero delta position. But of course, stocks don't always move together. But in theory, you're exactly correct. You want to negate the deltas on your portfolio, ideally beta-weighted net delta, right? Beta-weighted net delta. We'll go over that. That's what we're looking at today. Ruby's going to come in and give you far more interesting information than I've done. But if you enjoyed that, let me know, because I'm happy to go through every Tuesday. Happy to go through the portfolio, and we can do that instead of only just having classes all the time. We'll see you after the break.
Hey, welcome back to the show, to Trade Expectations, and I'm joined by Ruby Lau. How are you?
I'm good, thank you.
I heard, Ruby, that you've been affected or somehow affected by the malarkey over at Heathrow.
Yeah, basically 2 days ago, I never thought I would wake up listening to the news about Heathrow fire, which I have a friend visiting me like exactly on that day, got detoured to like Frankfurt instead.
Yeah.
And then the luggage was also lost on the way, and then he was struggling to come back to London, but eventually he made it, and then the luggage arrived 2 days later.
Oh my goodness, it's incredible, isn't it?
Yeah,
You see
I just never thought this would ever happen, and I have to really rearrange everything in my day to make sure that I'm giving my friends support.
Oh wow. I was just gobsmacked by the fact that I read that the backup was biomass, and wasn't enough to get everything back on again, which is incredible for world-class airport and one of the busiest in the world. And speaking of busy, it's been an extraordinarily busy week on the markets. Lots of volatility out there. Ruby, of course, is our head of strategy, delivery and engagement here. I guess the first thing for loads of our new viewers is to give us a quick snapshot of what you do here at IG.
Right, cool. As I am the head of strategy of delivery for the data and AI transformation team. This is a fairly newly formed team. I think we're roughly half year old. It was kind of also a transformed version of the previous data team. So I work in the strategy pillar across all the data and AI experts. So we have expertise in data science, machine learning engineers, advanced analytics, and also the trending Gen AI areas. So we have some Gen AI engineers joining, who has been joining the team, who could help us to really expand the capability of AI into the Gen AI and large language model area. We also have business intelligence to make sure that, so we're basically a bunch of very technical data users, except the strategy pillar. We do the planning. We make sure that what we're delivering as data and AI product actually fits what our client needs.
Wow. So unlike Rich and myself here, Ruby has a proper job, a real job. My mum and dad would be proud of you. Ruby is also the person that keeps my Cantonese up to scratch.
Hi. Do we have Cantonese viewers here?
We do. We have Tiffany. Shout out Tiffany speaks Cantonese and Hokkien as well. We have a load of other viewers from the region who can also speak, and you can translate to them. So Ruby is our AI yakgyot taksai.
Data and AI yakgyot tag.
That means with one leg you can hit everything. So she covers a wide universe of designing data and tech capabilities here at IG. I guess the thing too is how is this all transforming? We've got lots of viewers who are clients watching, or about to take the step to make their first trade. How does the work that you do transform and better the customer experience here at IG?
Right. So there are many ways we could leverage the power of data and AI. Our work expands the value of data so that it could deliver not only its raw value, but also some insight-driven value to our internal business. So the most straightforward way is to deliver some, to make sure that our product teams, who has been really every day enhancing our products to our clients, they are really consuming all of the data point from our client feedback and client insight in a more insight-driven way. So we don't just pass through the raw data to our product team, but we also transform and do using data analysis and interpretation and also reclassification to actually transform data into something that it's meaningful and valuable that they could act on when they build our product and improve our product. And then we also, because of the capability of AI is keep expanding, we also want to make sure that we extract the value of AI and embed it into our product. So there are a lot of opportunities around personalization that probably our audience also heard from me last time and also from the industry news. We know that NAI together with Gen AI, it has a lot of personalization opportunities across all the customer touchpoints. For example, when a new client kind of like join IG through the application process, it could be quite chunky, and then
the KYC.
yeah.
Oh my goodness, yes.
Yeah, the time to it could be a bit longer because we just have a regulatory requirement that we need to like process, like hit certain process in order to make sure that we are running in a regulatory friendly way. So we have a lot of efficiency gains by implementing AI throughout the process, and some process could be even longer in like outside of UK, because we just don't have like all the language expertise like in-house, and it is also not as efficient hiring external language expertise on these type of process. But we know Gen AI is kind of transforming the multilingual and increasing the multilingual capability of AI itself. So yeah, this has been really a great efficiency gain and time saving for us and also our client when they try to get an account in IG activated. So yeah, a lot of more personalization opportunities throughout the onboarding and then the journey of our new client. And then for existing client, we know that every time when you log into IG app, like there's so much information there from content and from data point of view. We have been doing a lot of discovery work to make to find ways to make the experience more seamless and relevant and also tailored to the individual users, because every time when you open the app and use or in mobile application or web application, you leave some footprints, and then we want to make sure that the footprint, which is the data point you left to us, is actually a bit of a value exchange we can deliver back to you by tailoring the experience so that it is more relevant to you every time when you open it. It is using a combination of classic data science, machine learning, and artificial intelligence, and also the new Gen AI capability, which has increased the capability of predictive behavior that we could embed into our product. So more to come. Hopefully, over time, our end consumers, our clients, will be able to have a more tailored experience. Every time you have an experience that is really directly relevant to you. So there are also other ways about educational contents and also how we distribute content so that you don't even have to you spend the least time to get the most information.
I'm very excited
delivered
about
to your
the footprints, Ruby. So the footprints that I leave, for example, or our traders leave, will that help nudge the system to kind of serve up articles, content, trade live with IG, things that one is currently already trading, interested in, for example, I like gold, I like WTI, and I also like the dollar basket. Will it then, nudge me on these items of content so that I don't have to go around looking for it?
Yeah, distribution of content is a key area that we look to really implement the first in a AI personalization. So I don't want to spill too much before the product is even launched, but this is going to be coming very soon.
Oh,
in terms of when you open the Content Explore sessions, it would be very likely tailored to your recent activities.
Fantastic.
Yeah.
And is it able to search Trade Live with IG, for example, keywords that bring them to that specific part of the show? If, for example, I talked about gold, is it that clever? Is it clever enough to do that?
Currently, we are working towards serving the most consumable, the highest quantity of data from IG, from you guys, and also from I think some of our news partners. And then for video content, it's definitely a great opportunity for us there, to serve our client into the specific session on particular video content, and that's something we could actually work together between our team.
Of course, that'd be amazing. And trader friends, any of you with, and it's a very clever lot there, clearly just looking at their chats every morning, they really know this stuff. Do message me on ask@ig.com or Rich and tell us what you'd like to see in terms of navigating either the desktop or if you trade on the mobile, how you'd like this to, self-serve this content or indeed nudge you. So Ruby, one thing I really like having is, especially on volatile market sessions, I like enabling my push notifications. I'd love if I could make it bespoke so that my push notifications that came through from IG only nudged me, for example, for specific instruments. Because I don't want the whole universe, right? It's crazy. Like, for example, I've got push notifications from elsewhere. There's almost too much and I can't filter it. So after a while, I just hit the off button.
Yeah, of course. Like, we completely understand, like, the client experience, if it is not personalized and if it is just rule-based, for example, is not going to be as, it is a bit of a noise that added to your day-to-day life in this like information explosion area. So we know that if we kind of increase the ways of communication and increase the communication touch point, we definitely need to make sure that they're being personalized and tailored to individual customers before we add those points in. So notification is like a good way that we could leverage a combination of AI and Gen AI to do so.
What's also interesting is, are we able to, for example, put in, I've only read about this, and I know it costs quite a bit, but there are companies out there where it almost prompts you if, for example, let's say you trade cable, and cable's surging or moving in a direction or moving against you. I know that we have already some push notifications to alert traders if it's going the wrong way, right? So you've got position on, but it's going the wrong way. That's great. But also, is there the ability to have a push notification to say, look, there's a vol surge coming up, right? Or vol is about to collapse. And that would be really handy for those people with positions on, but then, you're out getting a coffee or, you've forgotten about, keeping an eye and someone grabs you for a meeting or, that would be really useful to our trader friends out there. Is that even easy, possible?
Yeah, it's definitely possible because both classic AI and also the new Gen AI has really good capability on pattern recognition and also prediction. So this increased capability is something we are investigating and want to make sure that we have done enough testing so that it is in good quality, detecting the correct patterns and correct trends in a quality way before we embed into the products.
Right.
And again, I don't want to spill too much before any feature get added.
Andrew McKilvey also getting excited there saying, and I'd like a notification for my holdings the day before the results are coming out. Me too, Andrew McKilvey. Currently, my notification is R. Saxena because she and I seem to be aligned. She goes, oh, it's tomorrow. I'm like, yeah, wow, yeah, it is tomorrow. But I will find out for you, Andrew, because I would like that too. It'd be wonderful if you could just say, or even if it knows already that you trade BYD, you trade, right?
Yes.
Tesla, you trade Microsoft, and it kind of nudges you.
This
earnings in 2 days' time, right?
This is exactly how we spend a lot of our resource on to make sure that I can
be your test.
Yeah, we are actually testing with some of our clients together with our UX research team to make sure that when we embed this capability into the product, it is appearing the exact way and in a seamless way in the existing product that our client needs. So we're doing some testing right now before we actually launch the new feature. But then, obviously, we own IG platform is full of different data source, and also the footprint from our users are really great way that we have the value exchange of delivering the value of data back to our audience using the AI capability. So that's exactly what we're investing a lot of our time on. And we would really like more opinions from the audience and also different users.
Work for you.
The more we hear about that particular feature, it would be easier for us to prioritize and give resource to build that product. So all the opinions from every single client is going to be very valuable for us.
Brilliant. I've put that in the chat as well. Give us all your AI wishes to Ruby, not to me, to Ruby. Phil and Dr. Watson, how much time have we got left? Oh, we're out of time already. So we have to go, but we haven't got to the point yet. Everyone's like, oh, well, we asked you about how you got into this field because it's so interesting. We'll have to do that the next time you're on.
Sure, no problem.
And you happily be your test bunny. And I'm sure everyone else will be too. They're going to send me their, wishes, their wish list, and I will get that to you. It's been a pleasure. Thank you so much. And
Thanks for inviting me.
yeah, a definite pleasure. Stay right there. She doesn't know it yet, but I'm going to give her my wish list after this. Stay right there. Don't go away because we have Tom Wolstenholme up next with me to talk about hedges and hedging. Hey, welcome back to Trader Tools with Tom. Now,
Hi, good morning. How are you?
I'm very good. Everyone's dying to hear. Did you choose a type of hedge?
They're on with the sound effect already. I haven't chosen the hedge, no. But you'd be pleased to know that I'm going to get some turf. That was my latest decision. So
Okay, so you parked the hedge decision, but you got turf.
I'm going to get some. Do you think I can get 16 rolls of turf in a mini? That's the latest thing, because I need to figure out, dimensions. Can that work? Can I get that in, do you think?
No.
No.
Unless you want to wreck your mini.
Oh, it's ruined, so don't worry about that. It's more like, can I ram them in? Can I fit them in?
Yeah, I think you can. I mean, you just need a lot of tarpaulin because even though they're rolled up, you get dirt spillage everywhere.
Yeah, but as long as I can get them in,
Yeah.
we're good.
I think you can get them in. And you know you need to choose a good day, right? What I mean is don't try and lay the stuff and then it's like sudden savannah weather and it all dries out. You need
Oh yeah, it needs to be get it home, get it laid.
get it laid, make sure it's well watered.
Yeah.
Don't do that thing where you put it down and then suddenly it's like, you know, you're in Texas kind of weather. Not that it ever happens
unlikely.
here. Yeah, unlikely. But then, you know, you see these people panicking because they're out there trying to water it because they're all dying, you know, turning yellow. And, you know, grass really resilient. But, you know, when you've bought them and they're traumatized because they've been cut up and rolled up.
Got to treat them with care.
Yeah.
Play them some music.
Heart
Make
FM.
a nice environment.
Or classic FM because you're so
So
high standard.
High
By the way,
brow.
I sent you that picture from IKEA on Sunday. I wasn't referring to you. It's just because I
know this is the kind of thing I get at the weekend. I get text messages that just say knob on them.
I was stood in a queue with lots of. It wasn't because of you.
It was doorknobs. It was
With doorknobs. Just a quantifier. We're not that sort of show. But yeah, I thought of you. See, I thought of you. And back to Trader Tools. We are here answering some very clever questions from our clients. Gavin Ackers, one of them asking in relation to volume, is there any recommended links to help understand it better? We also had another question on the previous show on Ange and Tom. Can you help us filter for more inflation resilient stocks?
Yeah, should we start with that one? Should we start with inflation resilient stocks?
Yeah.
So yeah, the question was how can we identify inflation resilient stocks? I think there's a few things to consider.
Trump resilient, basically.
Trump resilient, inflation resilient, whatever, resilient, let's call them.
Yeah.
I think there's a few things to consider. The first thing is pricing power, right? So I think you want to be thinking about which companies can increase their prices and not lose customers. Yeah, would you agree with that? That seems fair, doesn't it?
Yeah.
And essential goods, right? So things that people will always have to buy. Yeah, so food, utilities, things like that. And I think probably the third thing would be strong margins, cash flow, that kind of thing.
Yeah.
So given those two, do we agree on those themes?
Yeah. And I like it. And I also like the whole kind of like, you know, it's like good times, bad times, people still need to eat. Good times, bad times, people still fall ill.
Exactly, yeah. So pricing power, it might be things like luxury goods. It might be things like, as you said, healthcare, pharmaceutical, that kind of thing. So sector is one thing. I think the other is margin and cash flow. So we can find those things.
Great.
And we can filter by them, can't we? So a couple of ways I think we can do that. So if we bring up my screen, please. So this is a stock screener. Shown this before. At the moment, this is sorted by market cap. But I think if you're looking for inflation resilience, here are some of your sectors. I'll show another one in a minute that has a larger number of sectors. But if you were just looking at this one, for example, utilities.
Yeah. Can you zoom in slightly? My eyesight's not too great.
Sure. Is it your eyesight, or is it you're getting told off by the gallery again? How's that for zoom?
Wonderful.
Doesn't get bigger than that. So I've got utilities. That's a good start, I think. So things like your utilities here, people always need utilities. Inflationary times, particularly resilient.
Yeah, I like the fact that it's got next era energy up there too. When markets were being pounded the last several Mondays, you know, with the volatility surge and the like, everything was a sea of red, and the likes of next era energy, a lot of the energy related stocks still held up pretty well.
Yeah.
You know, and I think next era also have, remind me if I've got this right, Monkey Man, because you've got a good memory. I know that they're also in the whole kind of nuclear play as well. So that's great. We can
Utilities
filter.
is one.
Yep.
Other ones, healthcare.
Yes.
I think potentially Johnson & Johnson, United Health, things like that, resilient to inflation. So sectors is one thing. The other thing I mentioned was margins and cash flow. Now, it's not something that we've got in here, but a tool I quite like is the TradingView stock screener, which you can find by just going to TradingView, going to their stock screener. This one here, you can filter on cash flow. So companies that have good cash flow in inflationary periods are going to do potentially better, right? So if I looked at, we want more zoom. Always want more zoom.
Oh, more.
Is that better?
Yeah, that's much better.
I'm blinded.
Amazing.
Okay. So with this one, at the moment this is sorted by market cap. What you can do is you can then go to, it's so zoomed in.
They're
I
very
can't find it.
shy. They're very shy to tell you. So they use me. I get to be bad cop,
Yeah.
so that they get to be good cop. You see.
Yeah, well, it's not working. So I can, and then I can select cash. I can select cash flow here.
Yeah.
And so at this point, I'm looking at operating cash flow for these companies. So higher cash flow in inflationary environments, better, right? So I can sort by cash flow, and we can see, there we go. So for example, Agricultural Bank of China, larger operating cash flow than even Microsoft. Maybe not that surprising.
No.
But then you can look at, and as you flick between these different tabs, you're keeping your sort the same, right? So if you wanted to look at profitability, dividends, you could do so by flicking through, but you're still keeping sorted by cash flow at the top.
Amazing. And also some of the names up at the very top, not surprising there. You know, the Chinese banks, very good cash flow, very, very strong balance sheets. In fact, when they saw the, after the financial crisis, they looked across at Europe and the, you know, how much money you have to have on your books for a safe margin. They kind of looked at it and laughed because it was just pre-financial crisis. They had way more than that in terms of a buffer. But that's really cool. Does it show up anything at all with oil energies? I'm heading somewhere. Just looking at if we go back to his filter, because the other thing as well is it's meant to be an oil renaissance. You know, comeback oil. Met up with quite a few energy related oil and services mates last weekend.
Yeah.
And there was, you know, great clanking of champagne flutes over how, you know, a few years ago it was like, you know, anyone working for BP was, you know, beyond petroleum. Now it's back to petroleum, right? And all those people that grew, all those high up employees that grit their teeth and bit on the stick, as it were. And, you know, whilst the whole pivot to renewables and, you know, I want to see outcome, you know, I want to see this get better. I'm like, well, we can't, but we're going to do it anyway because that's the strategy at the moment. Now they're the ones laughing, and the executives that were brought in to create that pivot are the ones biting on a stick.
Okay.
So can we filter
so
high cash flow and also energy?
So
As in
sector-wise.
fossil fuels.
So sector-wise, what would that come under, do you think?
It'd probably go under. Doesn't have energy on its own, does it?
Doesn't have energy on its own.
It's interesting.
It is interesting. Energy minerals.
Oh, it comes up under energy minerals. There you go. ExxonMobil, Shell.
Okay, technically not a mineral. Is it a mineral?
No, I don't think so.
Yeah, so you're sorted by cash flow here. So you're talking operating cash flow. You're sorted by that, and yes, you can then go to your oil or other energy companies there.
Cool, interesting. Right, shall we go across to Gavin Acker's question?
Yes, remind me.
So Gavin asked, in relation to volume, is there any recommended links to help understand it better?
We can talk a bit about volume, can't we? So volume is the amount of shares or contracts traded in a given time period.
In fact, my humble opinion, I would argue, it's probably one of the most important indicators, one of the most important things. No volume, no liquidity, then, you know, it's everything, right?
Yeah, and it can tell you a few things. So if we can bring my screen up again. So places where you can look at volume. So on the stock screen, it will show you volume and average 3-month volume. Now, this is one way that you could look at where there has been lots of volume traded in a particular stock. But let's say you did look at a particular stock. What's useful is I've got volume turned on here. So if you go to your, hopefully you can see that. If you go to this chart image indicator here and you go down to volume, you can turn on the volume indicator. And this shows along the bottom. Things this is useful for, confirming or refuting a market move, right? So if there's a big price change, but no volume, then you might be less convinced by that move. Whereas if there's a big price change and there's lots of volume behind it, that might be a more convincing, there might be more conviction behind that move. There might be more market participants in that case. So here you can see, this is what we're on at the moment, Johnson & Johnson. We can see times when there has been, that was around August 5th, that's interesting, when there's been more volume traded. And so when there's a big price move in a stock, you might turn on volume, look at that volume, see has there been much volume behind that price move or not.
Interesting. I always have volume up purely because it gives me two things. One, and if you want to put up a chart, my chart doesn't seem to be behaving at the moment, but I will try once more. Gold, for some reason, it's not giving me the dates. Yeah.
You've turned them off, I think.
No, it's the full screen function that doesn't seem to want to. Here we are. Let's see. It, yeah, it's the bottom. It's cut off my volume. It's very shy.
Because you've zoomed. I told you Zoom was bad.
Told me Zoom was bad. Yeah.
Well, I can do it for you.
So,
yeah,
can you do it for me? Because, yeah, it seems to... There we are.
There we go. If we bring up...
So, give me the daily chart there. Give me the daily chart.
Okay.
Yeah.
So, if we go daily on gold,
yeah,
we've got volume down the bottom.
Exactly. So, I always leave the volume up for every single chart that I look at. And volume is essential before one trades because it gives you the kind of... It's like your weather forecast, right? Everything about trading is, it doesn't matter whether the stock's going up today, but is it normally up this high or does it normally react this way when volumes are a certain point? So if I see, for example, a surge in volume, that tells me two things. A load more buyers are coming into the market or a lot more sellers. And I want to see, for example, if there's a surge in volume and there's a load of selling. If the surge in volume continues, it means that more and more people are piling in, right? It's like heading for the exit. It's when Rich sprays too much of his Lynx Africa. And then everyone, the thing is too much. And everyone's like trying to run out of the exit at the same time.
It's more like a traffic report.
Exactly. It's like a traffic report or a weather report. At the same time, if there's been a move, right? Big sell-off, but nothing much has happened on the volume. And that to me means that it's not a strong indicator that, you know, that this...
Because it could just be noise, couldn't it? If there's no volume behind it, it could just be noise.
It could just be noise.
If there's a big price move and the volume is going up and up and up,
exactly,
there's potentially more conviction behind that.
Yeah, or it could be
more likely to continue.
Exactly. And there are certain terms. Some people say noise. Some people say trader's remorse. You have a bit of a, downtake. It's almost like it tests it before actually penetrating and heading in the new direction. Gavin Acker saying, I usually search for more than 1 million volume on my screener. Is that good liquidity? I think that's pretty good. To me, that's kind of like,
It depends though. It depends on how many shares the company has and what the price of the share is.
Yeah, and also, as I said, like a weather report, it also depends on how it's moved, in recent days. You always see us zoom out and we look to the left because we're looking for how the stock has performed and when it last penetrated that level. R. Saxena.
Well, hang on, before we move on. If we just bring up my screen, there was a mention there about I use 1 million as a gauge or whatever. But if you look at the top average 3-month volume, which is what I've sorted by here, you can see, for example, this one, 632 million, huge amount of volume, but the share price is only 3 pence, right? Or this one here.
So it's penny.
Exactly. So Premier African Minerals, for example, that's like a pre-revenue energy company, right? Not making any money. Issues loads and loads and loads and loads of shares. So that's got a humongous volume behind it, but they're only a penny each. So you can buy a hell of a lot of them. So that might be, if you saw that, you've got to bear that in mind, right? Because if it's a really cheap stock, it's the company that's not generating revenue, that's issuing loads of stock, then yes, you're going to have a lot of volume traded.
Yeah.
Because you can buy them by the truckload.
By the wheelbarrow load, by the mini
in this
load.
Case, the giant African truckload. Yeah.
The other good helpful hint as well to add to Tom's point is look at the price action, right? You want to see really strong bars, trend lines. You want to see consistent volume throughout the bottom. What you don't want to see are big gaps all over the place, not much activity, a lot of volatility, which means that this stock could be highly moves very erratically. Those that have what I say strong strong blue chips, very robust, very liquid, like the Microsofts, the Tesla, you'll see a lot of volume at the bottom. We've got loads of other questions. Can we go to the next one?
Oh yeah.
R. Sachs came first, producer Phil, before Chan Patel. R. Sachs asking, what is supposed to be good volume to gauge good liquidity in the UK?
It's going to depend, isn't it? I think. Do you have an answer to that?
Yeah, go. I think it really depends if you're trading, UK banking stocks, or if you're, trading, for example, airline stocks. It really depends on the sector. I would say you'd have to gauge it and compare it to the sector. Like miners, for example, you just showed us one. I never even heard of them before. But then you've got all the big ones, the well-known names with a lot of volume, like Barrick Gold, like Glencore. So it really depends on the sector.
So you can compare it to other stocks in the same sector, but also you can compare it to itself, right? Because as you'll notice that the volume changes on the stock itself, so lots more volume traded compared to previously, could be an indicator for you, couldn't it?
Yeah, totally. The other question that we've got here on the chat, Chan Patel. Ange, when you see the volume at IG Gold chart, is that the volume of IG customer trades or from the actual underlying market? This is from the actual...
It's the underlying market.
Yes, yeah.
It's not IG. So you don't confuse, for example, if we bring up a stock, if we just bring up my screen, you can see client sentiment. That is IG client trading activity. But no, the volume chart, if I go back to the chart, this volume here, that's at the exchange level. That's the amount traded for that stock on the exchange.
Yeah, and Chan Patel, that's why when you look at, for example, the DAX, and you look at the, we call it the Germany 40, and when you look at the FTSE, for example, and even when you look at, the NASDAQ, but here it's Tech 100, it's all based on the actual underlying. So Gavin says, thanks for that, both very helpful. RSX says, thanks, it was very helpful indeed.
Great to hear.
Oh my goodness, this was wonderful. Nice, and we are having to wrap now, but before we go, what is your next DIY project?
Oh, painting the deck.
Oh, which deck? Boat.
The garden deck.
The decking.
Sorry, decking.
Decking.
Yeah,
the
gotta be careful not to say it in an accent either, because it sounds like something else.
Something else,
Exactly,
yeah. No, anyway, the garden decking. So, I hope we have a picture the next time you're on.
I'll bring you.
Or you just starting with?
I haven't yet done it, but I'll bring you a before and after picture.
You need to level the ground, right? Spirit level.
Maybe.
Shall I bring one in for you? Chance Patel says thanks both. On that note, we'll be back next week. Send us all your questions. We'll get them answered for you here on Trader Tools.
Boom goes the dynamite. It's Monday, March 24th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Elias Spivak in San Francisco, Dylan Radigan in Milan as we wrap up the trading day. Futures market closes at the top of the hour, 55 minutes from now. Come tell us what you're talking about and trading today. Come over to the YouTube channel, chat with us. Tell us where you're from, what's going on. If you're already there, come over to tastylive.com, the website, see what we're all about. Of course, the platform Tasty Trade. Ladies and gentlemen, it was a good day for stocks. Tariffs on April 2nd are going to be narrowed. No tariffs on autos, no tariffs on semiconductors. It's a good day for those tech stocks. NASDAQ here up around 2% or so. S&P up 1.68%. Dow Jones up by 1.39. And the Russell is your leader, up 2.44. It's likewise a good day for crypto. Bitcoin up over 5%. Bond sell-off, not just the tariff news, but some pretty good economic data this morning. The S&P Global PMIs beat expectations. Ilya has a lot to say on that. Gold and silver down a bit in this environment where risk-taking is flourishing. Mixed market for currencies, and the dollar may be putting in a short-term low. We'll talk about exposure and more there. Guys, we have some time to talk through this week, a week in which earnings are light, the macro calendar is thin, but markets are moving. Ilya, stocks are rallying. You were dutiful in your short exposure, riding the whole thing down and basically getting out the low. You've been very patient in trying to reacquire some new short deltas here. And I think that patience has served you well. So now after a 4% move off the lows, is this the end of the correction, or is this just setting us up for a new opportunity to potentially get short?
I think there will be an opportunity here to get short, and this is not it. From the looks of it, there's more wood to chop, as you might say. There's more upside, it looks like. The next inflection point I'm looking at is the underside of those lows from January, where we carve out that range. We peak in early December, then kind of in a choppy fashion stair step down to those lows from just the beginning of this year, kind of mid-January or so. That takes us to somewhere over there, and sort of the closing lows around there make for a bit of a range between, let's call it, sort of 58.60, 59.20.
Sure.
Kind of 20 points around 5,900, 40 points around it, something like that. Support and resistance are very rarely aligned. They're usually a sort of area of fuzz. And so somewhere over there, I think would be interesting to look for opportunities if the market decides to stop there. If it doesn't, it can, of course, not and go all the way up and hit something like 6,000. And that would still not be, in my mind, a change of course. It would just be a deeper retracement. I think you really have to do quite a lot of constructing here for this to make sense as a longer term buy, which is not to say that a tactical long position is something that I think is unattractive. For me, it's more the pricing. We were talking about futures on Futures Power Hour earlier today. However you price along here, whether it's you're buying a call spread or you're selling a put spread, you're sitting on basically one-to-one risk reward with less than 50% probability of profit. That just doesn't make sense. It's not risk reward that makes any sense. And so for me, I'm not opposed to buying if there is a further vol crush, say, and we don't run away from current levels and the pricing gets more advantageous. Otherwise, you wait, you get to where you're going to go. As you go higher, the vol is crushed, and you're now buying puts as a directional short. That's sort of my idea. If the market lets me into a tactical long, okay. But if it doesn't, the longer term idea is to wait, let it get to where it's going and sell there.
Dylan, last week, in the face of all the fury and bad press around a name like Tesla, you were down in the foxhole selling puts. It's an 11.9% rally in today's session. Is this a sign that the worst of the broader equity market sell-off is over, or was that just a hysterical market?
I think it's a sign that Donald Trump and his tariff madness is driving this entire stock market right now. And if it's, tariff madness in the worst way, the market goes to hell. And if it's tariff madness in a lesser way, the market rebounds. And I just think that Tesla is purely a derivative of Musk himself Musk's relationship with the government and the perceived consequences or lack thereof of tariff madness. I think the only real question is what's going to happen on April 2nd, which has become the new cliffhanger date for the Trump administration, who loves to set up cliffhanger dates. And I think you could make a case that there's going to do nothing on April 2nd based on historical behavior, that they're going to create the appearance of doing lots of things on April 2nd with tariffs. And then midnight on April 2nd will happen, and it'll be the last second reprieve is like one of the signature gimmicks of the Trump administration.
It's almost a trope now.
Yeah. It's like the Dukes of Hazzard. Like, will they get him this time, Charlie? I don't know. And then they got away again. I mean, it's that stupid at this point.
Can I point out is the market interpreting all this news correctly? You see it breaking, and I'm intentionally leaving this in the lower panel here just for the sake of effect. Deal with this for a moment. Dow jumps nearly 600 points on Monday as investors hope Trump softens tariff stance. The article that's on the front page of CNBC right now, right? If we were to pull this up, from 2:50 p.m. today, 2:50 p.m., Trump pledges auto, pharma tariffs in near future. In the press conferences in which he says they're pushing back the reciprocal tariffs on April 2nd, that there's going to be, some countries may give a lot of countries breaks. He still says that autos are going to be announced thereafter. Pharmaceuticals are coming. Semiconductors are coming down the pipeline. The market just ignored this completely.
Well, maybe that's just not the current episode. If the reciprocal tariffs are the episode we're currently watching, and that reprieve has come, then that's the next episode, but the arc is going to be the same because the arc is always the same, and so we'll get the reprieve at the end of that arc. It's like a Pavlovian response almost.
It's just an interesting dynamic where the market gets reports yesterday over the weekend, Wall Street Journal, New York Times, Axios, that the reciprocal tariffs are going to be pushed back or narrowed in some form or fashion. We have a press conference today, straight from the horse's mouth, saying that, there might be an April 2nd deadline that we carve some things out of, but the tariffs are still coming, folks. I don't know, Dylan, that to me says that we should be very careful if we're operating on the long side, if only for the other side of this, which is the yield response has been for higher yields the past few sessions, and we're pushing to topside levels where in recent days when we've seen yields bump up above 4.3%, someone in the administration comes out and says something that ultimately jars market participants into maybe double thinking their stock exposure and wanting to get long bonds again. Ilya, do you think that the put has shifted back to SPY from TLT at this point? If one of our theses here, not just between the three of us here in Overtime, but as discussed with Victor Jones, Tom and Tony, right? The Trump put is not in SPY, but TLT. Is it shifting back to SPY at this point?
I don't think so. I mean, I don't think there's any indication that you've heard from the administration that necessarily that's the case. I mean, you haven't had a run in yields really to the upside. You're basically stuck in what is a range, and yields have come in, and ostensibly that's what the administration is targeting. They want lower yields at the longer end of the curve, perhaps because the endless whine from some circles that we didn't term out the debt enough. We did term it out quite a bit while the rates were low, but that we could have done much, much more and really termed out the debt into the decades. And that would be a good thing, which, if it were possible, why not? So it seems like this administration specifically wants to do that. And you and I were talking earlier, if anybody would understand how to spook the markets into lower yields, it would be someone like a Scott Bessent, a macro hedge fund investor that would understand sort of how the markets need to receive information and what they need to receive to spook yields and essentially strong arm the Fed with circumstance into cutting. So when you get some kind of a move here, ostensibly you get a response. If yields were to start to build higher in earnest, we might have to come up with a tariff headline or two or some such thing, if this is in fact strategy.
What's the strategy here, Dylan? Just to do a quick vibe check, is there any master plan? Are we still looking for that North Star on trade to find a direction?
I think you have two lines of thought here. One is the Captain Crazy Pants and his tariff war. But the other is which is very unreliable, could go any which way any given day, and all the things that we know. But then you also have a more reliable sense of slowing economic activity, full stop, whether it's the sentiment here, the advertisers this, consumer discretionary. I do wonder to the degree to which you do get a meaningful rally here as a result of perceived short-term tariff relief, if the opportunity is actually still on the Ilya's side of the ledger, to the short side, or to if the underlying reality is a slowing U.S. economy, full stop, and maybe the catalyst for the slowing economy is some of the craziness. Obviously it's a component of that. It may not be the only factor. It's probably not the only factor, but and so you kind of have to pick your spots. I think from a trading standpoint, that the Trump administration's economic policy is so volatile and changeable that if for those with the courage, I think it creates tremendous opportunity. Like to sell puts in Tesla was great, but for me that was real pure gambling. There was nothing. That was not a calculated risk, other than maybe the odds of how many how low can it go, but. It felt more like straight gambling basically, but I do think that the advantage of the Trump administration and its economic policy is that it provides big swings in liquid assets almost every day right now, driven by some piece of rhetoric. And so, I guess I wonder what I'm thinking is if you could really make a living trading against the same way there's like you always buy whatever Nancy Pelosi is buying, or you always do the opposite of Kramer, or you always last year were selling oil on fears of World War III. Like when the market does whatever it does, like today it rallied on tariff relief.
Ostensibly.
Ostensibly. So maybe you sell, maybe you get a short, a little lighten up here. Then it's going to get blasted at some point on tariff fears. I just don't know how reliable that is, but it's looking increasingly reliable, actually.
For what it's worth, if you look at the specific timing today and you say, well, what time in the day today did the S&P sort of make its run? And you start to, obviously it starts last week. We get a little bit of a lead on Friday. But if you look at where the actual kind of meat of it starts today, it is at a very auspicious moment. It's exactly at the time that you get those PMIs today. Almost to the minute. And so it front runs them a little because those PMIs do tend to come out on the Reuters terminal before they come out elsewhere, last I checked. So you can get a little early action, as it were. But you get very clear signs that, the economy is not that bad. And the Fed already told us last week that if things were to get dicey, they would come riding to the rescue. It just needs to show up in the big and important data. And so again, you sort of come back to when's the big important data? Not for a while. And so then what's the path of least resistance?
It's a good question. I mean, I still have my short put spread on an ES, so hopefully the path of least resistance is to the upside right now. At least
it certainly seems that right. way. I mean, I think there's just nothing to tell it not to do this,
not to drift higher.
Yeah, well, because the stock market we know is biased higher. Right? The stock market doesn't want to go down. This is not a two-way asset the way oil is or the dollar is.
Sure.
Stock markets like going higher because a ton of its large participants, be it pensions or endowments or whatever, they never sell. They're always long. They only buy more. So you have a thing here that sort of structurally favors the upside. So if you leave it with nothing but a Fed that said it's okay, we'll come fix things if need be, and nothing particularly new from DC, and data that was not bad, but actually sort of meaningfully better than expected, at least from the outset. Once you get into the weeds, it's dicier, but at least at the outset, better than expected at the headline. Why not?
Guys, it was a pretty good day all around here. We look at our FinViz heat map. Tech leads the way. Consumer cyclical up, communication services up, financials up, industrials up. I mean, everything was pretty much up today. The only things that were down were gold miners, junior gold miners, GDX, GDXJ, and utilities, XLU, which is only up by 0.03. And then you talk about the weakest winners. Staples, healthcare, energy, all underperformed the broader market. This market was led by consumer discretionary. XLY was up 3.75% today. XRT, retail ETF, up 3.39%. XTL, telecom, up 3.24%. Telecom to me is fascinating because we looked like we were putting in some sort of big distribution kind of top here, and now we're back into that range. There are some signs of the market turning around a little bit better. Sector rotation is perking up. Financials never really broke down. This is looking like a very long multi-month bull flag at this point, Ilya. There may be some juice here to the upside before we ultimately see things top off. I'm just curious as to how we reconcile Trump's comments this afternoon late in the day with the news reports over the weekend. So, I mean, Dylan, I think you just provided actually really valuable insight. The object of speculation right now is April 2nd. Once we get through April 2nd, the game clock resets. We have a whole new host of concerns. What tariffs are going to be here? What tariffs aren't going to be here? What's the cliff date that we have to start to worry about? It almost seems like there's kind of a rhythm that's happening now where the market is weak in like the 2 weeks after the date is announced, and then like the 10 days before this cliff date comes, the market starts to rally again. So it's like, oh, wait a second, he's going to blink.
No, that's why I'm starting to wonder if this is actually becoming as predictable enough to be useful.
We started at the beginning of the year wondering if it was Boy Who Cried Wolf, right? We had 6 weeks of Boy Who Cried Wolf. And then you had a bad 3-week stretch in late February, early March. But now it's like with today's action, okay, yeah, you've already told trading partners what tariffs aren't going to be there on April 2nd. So you can say what you want in your daily press conference. Just we know what you're going to do. Watching what you're doing, not what you're saying. Okay, I guess that's the world we're back in. Ilya, it's not just the tariffs, though. Let's talk about those PMIs. Bonds notes take a significant leg to the downside here today. We have the S&P Global PMI come out. This is the report on February 21st, by the way, that kind of kills the market.
Yes.
Recession concerns running high. We now see that after the revisions, coupled with this latest update for March, we're back in expansion territory. There are good signs, there are bad signs. Just talk us through the data and why this helped the market today, at least in stocks, and hurt bonds.
Sure. So let's first contextualize this a little bit. So over the course of January and February, you got some real weakness, and it was coming from the service sector, and it was mainly something that was, if you read the reports on the S&P Global website, has them available, and we've of course talked about them